Hello, everybody. Welcome to Tuesday. The S&P 500 was up a little bit more than 0.6% today. Really good day, new record high, and we actually closed finally above 5,500. Great kickoff to the beginning of this first half of July that's supposed to be so good. A couple of things that are kind of interesting. First of all, today, the Fed Chairman Powell was talking about how disinflation is resuming, and so you have inflation when prices are going up, quite heavily. You have deflation when prices are actually going down, much more rare, but it can happen. And then, of course, they call it disinflation, which is when prices are still going up, but they're not going up as fast as they were. And so that's what's happening now. And of course, the market's been responding positively to that, especially since the end of April. And things continue to move. If we look at the first half of this year, the S&P 500 made almost 15%. If you go back to 1950, that's the 13th best first half of a year, which is really an accomplishment here. And then if we look at kind of historically, what's that mean for the second half of the year? If you look at the last 10 years where you had something similar to this in terms of an increase, the average rate of return was actually 10.4% for the second half of the year. And it's sort of this momentum thing. It's what we use a lot in our investing technique. My belief is that if you look at things, they tend to get on a roll and can stay on a roll for quite some time. And so the object is to kind of find those things that are rolling, get involved, and move forward with them. And so the whole market has momentum right now, and you can see that obviously, especially since the end of October last year, market has been chugging along with one exception for April when we were down 5%. So, I think things are going to go well here, at least for a little while. Again, if I'm looking at the rest of this year, I would expect some type of a pullback. Wouldn't be surprised to see it happen kind of in that September, October timeframe, just because we're heading into a presidential election. That's not unusual to have a pullback at that point, only because the market is sensing uncertainty, who's going to win, what's the Congress going to be made up, and those type of things. And then historically, we have had a rally after the election is over. That money that was being held back September and October comes in after the election just because now we have a known. So it'll go up more or less depending on what happens in the election, but it generally does come up. Matter of fact, November historically is one of the best months of the year on a seasonal basis, and I think part of that is because of the presidential election that happens every 4 years. So, nonetheless, that's what's happening today. Good day to be an investor. Good day to be in the markets. Look forward to seeing what's going to happen tomorrow. We'll talk to you then. Thank you very much.